Hello, dear students. Welcome to SF Accounts Academy. Today we are discussing about depreciation sums. Before explaining depreciation sum, previously I explained depreciation introduction. I hope you are understanding well. So now we will start depreciation sums. So first sum we are doing here, that is Ganesh bought a machine for rupees 17,000 and paid for its installation rupees 3,000. Means bought is nothing but purchased. Ganesh he purchased a machine for rupees 17,000. Further he paid installation charges that to 3,000 on 30 September 2017. Means Ganesh purchased that machine on 30 September 2017. Next year, depreciation is provided at 20%. Depreciation is nothing but rate of depreciation. We got here 20%. And here under straight line method will be there. Means here we have to follow straight line method. Next year, see here, prepare machinery account up to 31st March 2020. Means here Ganesh is following financial year. 31st March is nothing but financial year and he is following 3 years. See, 2017 he purchased that machine and he used that machine up to 2020. Means 2020. 3 years account we have to prepare here. First we have to write here, see, machine account. Next we have to draw pro forma. Left side, debit side, we have to write date, particulars, number, amount, rupees. Next credit side, we have to write date, particulars, LF number, amount. Next we have to follow working notes. See, calculations of depreciation. First we are calculating cost of assets equal to value of machine purchased plus installation charges. This is our formula. So value of machine purchase. Here see, Ganesh bought a machine for rupees 17,000. So purchasing amount we have to write 17,000. Here plus is there. So these plus we have to write here plus. Next after that installation charges he paid how much? 3,000. So here in formula installation charges is there. That's why we are writing here 3,000. These two we are adding here. 17,000 plus 3,000 equal to 20,000. So here we got cost of asset equal to 20,000. Now see here. He purchased that machine on 30 September 2017. So in date column debit side we have to write 2017 30 September to bank account. First in 2017 we are purchasing. So that's why we are writing here to bank account and he bought machine at rupees how much? 17,000. So that 17,000 we have to write here and he paid installation charges 3,000. These 3,000 we have to add here. So 17,000 plus 3,000 we got here 20,000. Next he used this machine up to 31st March. Means 30 September to 31st March he used that machine. So here we have to calculate depreciation. How many months he used that machine, that many months only we have to calculate depreciation. So here we have to write by depreciation account. Okay, so here see, already we have to calculate here annual depreciation. Annual depreciation is equal to cost of assets into rate divided by 100. Means here cost of assets we got here 20,000 and rate also there in question. Rate of depreciation is nothing but here 20% is there. These 20% we have to take here 20 by 100. These 0 we have to cancel. Again these 0 we have to cancel. Next year 2 zeros are 0. 2 zeros are 0, 2 zeros are 0, 2 twos are 4. So here we got annual depreciation 4,000 we got. This 4,000 we have to take here. like a credit side by depreciation account 4,000 into how many months we used. In first year we used that machine September 30 September to 31st March, means September to March is nothing but here we have to calculate months. 30 September he bought that machine. So here we have to calculate October, November, December, January, February, March. Means overall 6 months he used that machine. So here we have to write annual depreciation into 6 by 12. So here 6 ones are 6, 6 twos are 12. 2 we have to write. Again 2 ones are 2. Next 2 twos are 4. These 3 zeros as it is we have to write. So finally we got depreciation amount 2000 we got. Okay, next here we have to write by balance carried on 20,000 minus 2000 we have to do. We'll get here 18,000. Next here credit side we have to add these two and we have to write here 20,000. 18,000 plus 2,000, 20,000 will get, and both side we have to do tally this 20,000 as it is we have to write here. Next here first year we closed our account. Next year up to 3 years we have to follow this procedure. So here see here carried on we closed here today. Next tomorrow again we are continuing this business. So here carried on means here we have to write brought down 2018 1st April to balance brought down. How much we got? 18,000. So this 18,000 we have to write here. Next 2018 1st April he started again and up to 31st March he is ending. So here we are writing 2019 31st March by depreciation account. So our cost of assets value, how much we got here? 20,000 we got. These 20,000 we have to take here. And next in question rate of depreciation will be there 20%. These 20% we have to take here into 20 by 100. These 0 we have to cancel. Again this 0 we have to cancel. Again 2 zeros are 0. 2 zeros are 0. 2 zeros are 0 we got. Next here 2 twos are 4 we got. So overall 4,000 we got. Again here we have to write by balance carried on, means 18,000 minus 4,000 we have to do. Obviously we will get 14,000. Again these two we have to add. 14,000 plus 4,000 will get 18,000. Again debit side we have to write this amount as it is. 18,000 we have to write. Both side we have to do tally. And here in 2019 31st March we are closing our account. Again next day we are opening our account 2019 1st April 2000 to balance brought down. These carried on amount 14,000 we have to write here 14,000 as it is. Next we have to follow this account up to March 31st 2020. So here we are writing 2020 31st March. Next again we have to write by depreciation account. And already I said you in straight line method once we will calculate depreciation and same amount will take every year. So that's why here we are taking as it is 4,000. These 4,000 we are taking as it is. See, annual depreciation equal to 4,000. So here we are writing about 4,000. Next step what we have to do means this brought down 14,000 minus 4,000 we have to do. Next 14,000 minus 4,000 will get here 10,000. So here we have to write by balance carried down. So again these two we have to add here. 10,000 plus 4,000 will get 14,000. Again these 14,000 as it is we have to write. Here we have to carry down. Here we have to close our account. Next here we have to write 21st April to balance brought down 10,000 we have to write. So friends, so students, we completed our first sum. I hope you understanding this sum very well. If you understanding, so please share, subscribe and follow. Thank you everyone.